Okay, so about the topics, we'd like to conclude the aviation insurance industry is the articles entitled Recent Developments in the Aviation Insurance Industry. So I will speak English quite slowly so that you can catch up with the words. And the authors are Paul Hayes, Triant, Flourisb, Thomas Walkerc. So in these articles, they provide an overview of how GLI's insurance industry works and how the risk is spread between the insurers, how insurers treat deliberate acts of violence, and lastly, how insurers price the risk. So this is quite similar with the information from the presentation of Part 2 that your friend just presented before a while. So to minimize their risk exposure, so the large potential liabilities, we know that they are shared by means of complicated system among several insurers. And the insurance market has adjusted, they change after events of the 11 September, and uh, uh, they changed into a way that to cover and that made it reasonably to handle events of an even more catastrophic magnitude. And you know that the event of the 11 September was considered a catastrophe of the planet, right? So let's review some points on the aviation insurance market. So you know that in the literature reviews, they say that the fundamental principle of all forms of insurance is that the premium of many will pay the losses of the few. That's a principle that we have learned, repeated over and over many times through our lesson session. So the insurance companies, so they should cover the cost of running the business, the expense, and the commissions, and it will provide a reasonable profit and return to the capital that they employ. You know, and the insurance markets works to spread the risk between the large number of insurers and reinsurers, so that the amount of any one insurer is exposed to keep within a acceptable limits. So as I have explained to you that companies they have to do reinsurance and reinsurance in order to guarantee their exposures to reach a limitation. Otherwise, they're going to be bankrupted. So, you know that a decade ago, so this is the time when the major airlines risk has been fully reinsured, and but nowadays the times have changed, and you know that the markets is consolidated and the number of participants has fallen significantly. So there are a number of features of aviation that set apart from many classes of insurance, so that they will break the aviation products into small covers. So not fully reinsured like in the former time. So you know uh, why the aviation? It has one of the smallest premium bases in the insurance industry, but it's, it has one of the highest exposures to potential catastrophe. You know that the aviation industry, where we have the catastrophe that we have learned before with the aircraft accident, right? It's called a crash, the catastrophe. And you know that some new Boeing 747s, they are insured for over 250 million US dollar, and many wide-body jets will be insured for more than 100 million US dollar for each one. So, on the other hand, the liabilities for passengers and for the third parties liabilities, so the airlines have to buy to purchase the coverage. For example, the CLS coverage. We already know the CLS, right? For around 1.5 billion to 2 billion US dollars. And you know that the coverage for the loss of the event September 11 September. So the insurers have to pay for the loss. You know how much? It's around 4.3 billion US dollars. So with that amount, no aviation loss which has been never approached this level before. So you know that's why they say that with a small premium base and occasional catastrophic losses, the airline's insurance market can be very volatile, very vulnerable. So for the airlines industry, and you know that for the combined policy, that's covering loss and damage to the aircraft and its place, and its legal liability to passengers and third parties. So you must to understand that no single insurer has the financial resources to retain a risk of the size of a major airlines or even a substantial proportion of such a risk. This is very risky. And you know that the risk will be insured by a number of core insurers that we already learned. Core insurer, đồng bảo hiểm, right? And each of the core insurers, they will enter into a separate contract of insurance with the insurer. The insurer here, that means the insurance company, not nominated the airlines. So one of the core insurers, they will act as the leader of the risk and will negotiate the terms and conditions for the cover provided. And the leaders of the core insurance company, it will typically to be responsible for handling any claims that may arise. So they will responsible to do and to handle every claims that after the aircraft crash. And you know, we say that the policy we call the slip. So once the leaders, the insurance company, the leaders, they sign the slip. So the insurance broker, they will approach all the underwriters at the Lloyd's or insurance companies in London and to invite them to take the part of the risk. That means they do the reinsure. They are going to find the reinsurers. And each underwriters, the insurer, will then take a line, a percent, that means a percentage of the risk. And the insurance cover will be completed. Underwriters, they accept 100% of the risk and that they sign the slip. So in the world, so in the US market, you know that there are 3 large aviation insurers that are the Global Aerospace, the USAAG, and the French one, they called La Réunion Aérienne. I told you last time. They are the pool insurers, and it's writing business on behalf of 5 or 6 different insurance companies. And there is also a smaller insurers, they call the Aviation. So this company, it will write business on half of the 10 insurers. So you know the aviation insurance market is very, very vast and very huge. And for the international airlines risk, so for the non-US airlines, so the London markets will dominate the aviation insurance industry. So with nearly 60% of the comparative capacity and over 50% of the total capacity. So the London capacity is split and roughly equally between insurance companies and the large syndicates. So besides that, besides London, so we will have the Paris reinsurance market, right? And Paris reinsurance market is estimated to around 10% of the world's comparative capacity and 12% of the total capacity of international business. So, for the insurance, cover for most non-US airlines is leveled in London. So either directly or is speculative reinsurance of a local insurer. So the London insurers, they will lead the airlines business, including the companies such as Global, AAG, and Alliance, and Lloyd's Syndicates, and ACE, Emlyn, and Wellington. And in Paris, so the insurance company like Aviation, they will lead an increasing number of the international airlines. So currently, you know that how many aviation insurance company in the industry. There are more than 50 insurers that writing the international airlines business worldwide. So besides the insurance, we already learned about the reinsurance, right? Reinsurance, tái bảo hiểm, đúng không? So the aviation, and so that in particular the aviation insurance, and you know that in this industry, they will have the direct insurers. The direct insurers will rely on the reinsurance to help smooth out the effects of random fluctuations in losses and to reduce the impact of catastrophic losses. So, as I already told you, explained to you that the direct insurers on a risk will seek to limit their exposure to any loss by purchasing reinsurance. So the reinsurance can be divided into two areas, like in the presentation of your friend already stated that the reinsurance will have divided into proportional and non-proportional reinsurance. So the proportional will include the quota share and surplus, and while the proportional reinsurance will include the assessed loss and the stop loss. And for the proportional and the non-proportional reinsurance, I invite you to read more in the articles that the author has stated very in detail. So you will read and learn about that. So for the reinsurance of reinsurers, so for reinsurers here, you will understand that they themselves will have the insurance. I sometimes refer to looseness as the retrocession. Retrocession in Vietnamese, we have already studied that we call bên nhượng ái bảo đảm. Right? So the reinsurance programs of the reinsurers so can be quite varied depending on their perception of the risk and the structure. So you know that traditional forms of the insurance is that the risk may be transferred directly to non-insurance entity through the use of the tool, just likely as the alternative risk transfer or the catastrophe bonds. So these are the financial instruments that investors. So they may use the tools to include in their investment portfolios as a hedge against a downturn of the financial markets. See that? So for cover, so what does cover mean? Cover means that in the insurance coverage, in the aviation products that the insurance companies is purchasing from the insurer. So you know that following an airline's accident, so there may be a number of different covers that we call the insurance policy, right? So we will they will cover both by the airlines. So as I told you, there are two types of the aviation insurance products, right? This is the whole insurance. The whole insurance will provide the cover against the loss of or damage of the aircraft itself, and the passenger and the third liability insurance. So the cover for the airline's liability will normally be arranged alongside the hard cover in a single policy with the same insurance, including both the harm and the liability risks. So another important point is the war exclusion. So in your friend's previous presentation, you will see that they have mentioned about war exclusion. And as I have explained to you, and after the event of the September 11, right? And the aviation insurance company, they changed and they added the extension clauses into the insurance policy. So you know that most of the importance that the extension that namely and with the code AVN 48B, so that will include the war, the hijacking, and other pure exclusion clauses in aviation. And these clauses should be included in every aviation policy. So you know that the whole war's policies, so they usually have a fixed area grade limits. So currently for large international airlines, so the limit lies in the vicinity of 600 million US dollar to 1 billion US dollar. So after the September event, September 11, so there were changes, right? So because this was considered as a catastrophe, and you know that so you know that this catastrophe may result in a huge loss of life. Not only the passenger inside the flight in flight, right, but also other people in the two buildings. A huge loss of life. And they also changed their industry views on this type of risk because the risk is so huge also. So the aviation insurers, they begin to realize that the impacts of some forms of terrorism was unmeasurable, as I have said, cannot measure. And also the investors, the one that they provide the capitals for the industry. So they realized that the magnitude of the potential exposure they had in aviation was out of proportion to the small premium income that they have earned. All right. So these investors, they stop viewing that the aviation is simply some residual market. So they have to rethink, they change their point of view, and they have to think that this is the business that can hurt them or affect to their financial loss. Okay, so for these articles, so the main findings, they conclude that uh, to minimize the risk exposure, the large potential liabilities are shared by the means of complicated system of several insurers. That the principle that we already know at the first day of the lesson. So furthermore, they found that the insurance market has been altered after the event of the September 11. So the aviation insurance reality would be more reasonably ready to handle events of even a more catastrophic magnitude. Okay. So this is the end of the presentation of this article. So for more details, I invite you to read all of these articles that I have sent to you on the LMS. Okay, thank you very much for your listening.